Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. Thanks for being with us for the Big Three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Don Kaufman's with us, co-founder of Theo Trade. Good morning to you both. John, your thoughts here. I know you're going to talk about gold first, but just the big picture, how you feel about this market. Our last guest said he's watching 4350 and 4200 on the downside.
Yeah, obviously I've been pretty consistent being bearish in this marketplace, and that continues. I mean, look, I woke up this morning, threw on the red shirt. The S&Ps are down. We're definitely headed the right direction. What we first want to see is a little bit of spike in terms of volatility. Like VIX, it's been lying kind of almost like dead on the floor. We want to look for the VIX to actually pick up above and beyond about the 16 level. Then I'll turn around and actually reassess a little bit about the S&Ps and get a feel, I should say, of how far we might enable this marketplace to head to the downside.
Right, understood. Okay, so let's get to gold, which had been sitting at 3 weeks low last week. It's nowhere near 2,000 yet. It's at 1954. Often is a safe haven. What are you viewing with GLD?
So, with GLD, I'm actually going to leave some of the technicals much more to Ben on this one. Look, my GLD trade is going to be bullish. I'm going to give myself plenty of time. I'm going all the way out to the December 15 options expiration. The reason for a bullish trade in gold, look, the dollar has been absolutely explosive to the upside. So I look at gold, and yeah, gold has definitely been a little bit languishing behind, again, because of ultimately the strong dollar. But gold has just not been crushed. And at this point in time, a bullish trade in gold seems to make sense from purely a risk-reward perspective. If the US dollar is to turn around and head back down to any degree, I believe that gold could actually sustain some significant upside. Or if there's even like a discussion tomorrow of like inflation isn't necessarily dead, they move the dot plot out a little further, right? So rates higher for longer. Any rhetoric along those lines are going to be very bullish for gold. With that, I'm out to, again, the December 15 expiration. I'm going to be in GLD buying the 185 call, selling the 190 call. So it's a $5 wide spread. This one's actually done for a $1.21 debit. Nice shot to the upside with plenty of time to let it come to fruition.
All right. Let's hear what Ben says about the chart. Ben, your thoughts, GLD?
Nicole, the chart is very supportive of that narrative, a bullish narrative that is. There hasn't been a lot of conviction as of recent, as the dollar's been kind of teetering around this 105, 104.50 level, but taking a look here, we just had a recent test of the 175 area, which held, and I think that was key. We'll talk about the bigger picture and why in just a second, but first and foremost, taking a look here, as I noticed since basically the middle of August, when we were trading down around 174, we rallied up to 181, came back down, and I thought it was important that we held above that mid-August low, unable to take that out. So you've got a pretty well-defined lower extreme established at 175. You've got your upper extreme at 181. Do the math, it's pretty basic. The pivot here is 178, but let's not dwell too much on the 178 area, more so that lower extreme 175. And why do I say that? Because you take a look here at this longer term chart, we've got daily candles up here now. We're going back to the beginning of October. You can see we came off that 150 level where we had been kind of consolidating around 155. You see the conviction throughout November, December, into the beginning of the year when we actually topped out February, March, up around that 200 level or just shy of. Sideways consolidation. I mentioned the significance of 175. You can notice a couple tests of that key level right here. Again, just a pivot level in terms of based on that wider range that we're in. Let me show you one more chart here, taking a step back and look at the weekly time frame. This really solidifies that bullish narrative. Holding again above 175, you can see the areas of consolidation that formed. This chart here, this has been supportive of the bullish narrative all the way since the summer of 2014 when we were bottoming out here around 100. And you can see migration of value to the upside, currently consolidating around 175. Above that, opening up a door for a retest of the 200 level again.
All right, and you show that bullish trend over the long term, at least there. Don, any final thoughts on this one? I know you're watching the dollar as well.
Yeah, I don't say this lightly, but the dollar has literally exploded to the upside. I mean, it's one of the most vertical charts pretty much on any trader's screen. It is astounding to me how little gold has actually had in terms of an impact of such a strong dollar. And it's one of the reasons that I think at this point in time, look, we could take some very near-term pain being long gold, but in the end, I think it, from a risk-reward perspective, does stand some nice upside potential.
Okay, next up, Microsoft, which hit a high of 366 not that long ago. Why? And raising the dividend, right, today. Tell me more about Microsoft.
Yeah, I'm actually taking again another bearish position inside of Microsoft. So there's, to me, a very critical technical level inside of Microsoft, and that deals exclusively with the 320s. Right. So at 320 and below, I think that if we actually break that, there's going to be considerably more downside trajectory to Microsoft. And, right now, I think that we're seeing AI kind of fizzle out. You're seeing it in NVIDIA. You're seeing it a little bit in Microsoft. It's languishing at this point. So that AI narrative, if it kind of fades a little bit, we'll go through 320 on Microsoft and, again, sustain some significant downside. With that, once again, I'm all the way out to the December 15th expiration on this particular trade. So this is a point in time where, look, as traders, you be honest with yourself. Like, you're not going to be able to see what's coming right in front of you. But if the narrative actually holds true for a more significant period of time, I think we're actually positioned very well. So again, I'm going to create a spread for a more significant period of time, give myself to be a little, time to be right, time to be wrong, time to laugh, time to cry. December 15th, I'm going to go out and buy the 315 puts. I'm going to sell the 305 puts. So I'm going for a $10 wide put spread. And this trade is done for a $2.65 debit. So again, it's a defined risk trade. I'm negating a lot of the volatility risk, ultimately using a spread in here and giving myself ample time to be right, and us to actually pierce through that 320 level on Microsoft that I find so critical.
Yeah, and obviously you're really banking on some volatility too, because Microsoft has been a name that people love. Now they have raised their dividend 10%. That would be some catalyst for the upside. But as you said, you're giving it time to have that volatility and move lower. Ben, your thoughts on the Microsoft chart, please.
A little bit of weakness on the more intraday time frame. Recently just broke down at a key pivot level on the more intermediate time frame, but still what I see is a longer term trend to the upside. Let's just begin with that bearish narrative and where I think it comes from. Again, when you look at this chart, you can see we're going back here just a few days when we were up around 340. You can see a couple areas of consolidation that we formed at lower and lower levels, and then you can also see the conviction associated with the trade to the downside here today. Question is, will we start to balance at a new lower level that we can basically validate that working assumption that these areas of consolidation that continue to move at lower and lower levels? If we don't, if we V-bottom back up, the bears don't want to see this thing back above 332, because that would signal a bit of a shift here and a rejection of that 324 low that we've seen so far today. Here's where you can start to see that bullish longer term trend starting to play out, but you can also see, as I mentioned, how we're holding below a key pivot level around 335. In fact, we failed here a couple times, potentially setting up a bit of a head and shoulders pattern that would be very supportive of Don's bearish narrative. But in my opinion, as long as we hold above 307, we're still in this longer term, in this case, a more intermediate term time frame to the upside. Don was talking 320. For me, it's more 335 and then 307, which is, I guess, kind of right on the outer extremes of that 320 level. But taking a look here at Microsoft, this is what really stands out to me. We always talk about the significance of auction market theories, these concepts, the principles that I use to view price activity, the lens I view them through, or it through. But here you can see how it helps us determine trend, right, to the downside, but it also helps us determine when we've reversed that, because on the way down, we were establishing areas of consolidation to the downside, and while we were balancing around 232, we were referencing 266. We broke through that back in March of this year. Everything to the upside since has been very bullish, and I don't see a reversal as of yet on this longer term chart.
Yeah, and look, when we broke through a big green candle right there. And sort of
shows the energy.
Yeah, it really does. Thank you for that. Don, final thoughts, and we're going to do Russell 2000, looking at the small caps, that ETF. Your thoughts on that?
Sure. Let's jump right over to the Russell. So inside of the Russell, I think we're seeing a degree of a technical breakdown right now. And again, I'm not much more of a technician. I'm much more of a quantitative trader. Nevertheless, I think most of us are actually looking at, again, what appears to be a significant technical breakdown. You can actually see a head and shoulders there in the daily, and heavy volatility inside of the IWM in the last couple of weeks of trade. Implied volatility finally starting to pick up in there as well. The trade at hand is again out to the December 15th. So as you mentioned a little earlier, Nicole, I am looking for fairly substantial volatility once again to kind of, reign large inside of this marketplace. And we might be seeing some of the forefronts of that in today's marketplace. Obviously, seasonality does have an impact here. We're in late September. We're ready to rock in this marketplace. And I think it's befitting at this point. The Magnificent Seven has been just that. We're seeing a little bit of fade in a handful of those stocks, but the Russell here is, again, it's under duress. This trade, again, December 15th expiration, I am buying the 176 puts. I am selling the 166 puts. So I'm going a full $10 wide spread in here. I always use spreads to mitigate the volatility exposure. So as volatility expands out, look, I just want to define my risk. I want to get in, I want to get out. This $10 wide spread is done for a $1.95 debit. It is a very nice shot, if you will, to the downside. If you sit here and think to yourself, look, I think the markets could break down. There are so many headwinds that need I even begin to mention them just in the next couple of weeks, everything from strikes to government shutdown. We could go on and on this particular front.
Understood. And so with that, your thoughts, because a lot of people love to have the small caps in their portfolio, a good diversification tool, but they really obviously it could go to the downside here, particularly if you watch this dollar. Your thoughts, Ben?
Well, it has been going to the downside recently, a similar situation in terms of Microsoft, where we have some more a shorter-term weakness, but that longer-term time frame still suggestive of a trend to the upside. Let's just begin with that shorter-term weakness, because it's really starting to accelerate here, and it's supportive of Don's narrative in terms of the high conviction trade we've seen, not only to the downside over the last couple weeks, but look at the breakout that's coming into play right now. You've got lower lows, lower highs, red candles, and again, a vertical phase out of a balance area that just recently formed around 184. So we're in continuation of the pattern that we have been seeing. You can see top left corner up around 191 where we balanced, and then again the high conviction move that we're seeing here to the downside. As you take a step back, you can see a very similar pattern playing out, a little bit of weakness on the daily candle chart, and I'd imagine this is the head and shoulders pattern that Don was talking about. I actually see a couple on this chart as I look at the daily time frame, but recently you've got, looks like a couple shoulders around the 195 level, the head being up around that 200 area. Again, significance of the 180 area. Should you open up the door to the downside and take out 180, opens up a door for a retest of those lower extremes, a fall from last year lows that we saw. That was down around 165, 170. I want to show you though, as I mentioned here, that longer term trend to the upside still somewhat bullish. Now, this is what I went ahead and looked at here, an area of conviction that had been forming at a higher and higher level, 140 up to 220, but then you can see some weakness coming into play while we're still holding above 140. I did want to show you another possible scenario, and I think this is kind of the most bullish scenario here, where you eventually kind of work your way higher off this lower level and sort of establish a larger area of consolidation around 200. But yeah, seeing this area of consolidation, again, kind of getting back to this chart, not necessarily what the bulls wanted to see, because again, you've broken down from 220 now, still holding above 140, but not very supportive of that really strong energy, that strength, that high conviction to the upside. So I can understand Don's narrative in this one, the approach towards trying to take advantage of some of the weakness we've seen as of recent.
Yeah, and that's what we have been seeing, and we just have a lot of, balls in the air versus catalysts to give us the move higher at this time. So thank you both very much for the big three today. Ben Lichtenstein there on the charts, and of course Don Kaufman, co-founder of Theo Trade. Thank you both.